Morning everyone, my name is Saqib Arayan, resident oil trader here at JNF Capital. I'll be giving an insight into my look at the oil market and how I'm looking to trade it and how I have been trading it based on some fundamentals and technicals. Before I get started, I'd like to let you know that trading in the financial markets is not for everyone. It is possible to lose more than your initial deposit. Now moving forward, as you know, like I always mention, I don't fight the market. What I try to do is identify what the bulls and bears are doing, which entities in control, and simply align my funds in the direction of the the winning entity, really. It's a lot easier said than done, but it is possible nonetheless. Let's have a look and see what the bears are doing. Okay, so in a market that is rallying, what could the bears possibly be looking at? There's not much out there, okay, which is pretty decent. That's a good thing. That gives you a bit of conviction with the prevailing trend. Now, one of the things that as an oil trader I am looking at is the higher the price of oil goes, the closer it gets to the profitable levels of some of the shale oil companies out in the US, okay, some of the frackers out there, which is somewhere in the region of about $75. So what we have here is the higher the market gets closer to $75, the higher the probability that all those drilled wells that are not producing any oil will potentially come back online. That will add to the existing oil glut in the market, okay, and hence should start to put some pressure downwards to on the oil price, okay. So what we have right now also is that oil prices are in the short term extremely susceptible to geopolitical tensions. Now, every time Saudi starts attacking Yemen, or there was like recently that we had some Libyan rebels take over a high court in Libya. I mean, the market is spiking all over the place. You will also notice, generally closer we get to summer, the more these type of events take place. So in the short term, we tend to get these massive swings in oil prices. So yes, geopolitical tensions weighing also on, supporting oil prices, but randomly. Saudi attacks Yemen, markets rally by $2–3. Saudi then announces they've stopped their airstrikes, market comes back off, it starts focusing on oversupply or something else. So these are the main reasons. The higher the oil prices go, the more the more possible it is that the frackers come back online, forcing oil prices even lower. Okay, so as you know, oil prices have been rallying over the last couple of weeks. It's been a bit of a staggered, slow grind upwards, okay, which is indicative of a market that has had a massive capitulation and now it's just trying to decide whether it really wants to go back up. So we had that 60% drop from last June, and now it's kind of grinding slowly and steadily back up when trying to convince the traders that it's ready to start moving upwards. Now, why could it be possibly doing that? In a nutshell, we had strong NFP figures come out last week. That kind of raises that bullish sentiment generally in the market. Indices, everything rallied across the board. So there's that positive feel in the market. And then there is weakness in the dollar. The oil is inversely correlated to to the US dollar. So the weaker the dollar gets, the stronger oil will get. That correlation exists. It comes on and off depending on what is the main sentiment in the market, and provided there's no geopolitical headliner anywhere. So yeah, weakness in the dollar, strong NFPs. Another thing that we looked at is that basically the amount of crude oil imported by China doubled according to their latest figures. That indicates strong demand, and out of China, stronger than expected at least, supportive for crude oil. And finally, we are also looking at seasonality. The closer we get to summer, the more we expect that driving season to take control. All those refineries that were offline coming back online, which are most of them should be anyway by now. And then just basically more consumption from the American consumers. Basically, they go out on holiday, they drive a lot, consume more gasoline. Gasoline then obviously is a refined product, which would then should lead to a draw in crude oil stocks as well. So we are at a pinnacle point. Stocks in Cushing, Oklahoma have just been climbing ridiculously over the last 16, 17 weeks. We had a bit of a draw, but generally the theme is we're oversupplied. However, there are strong reasons for why the market could continue upwards. One of the things that gives me a bit of conviction as well is when I hear big banks and everyone taking, let's just say the big banks are going long, I will almost certainly be looking at at least very seriously be looking at taking a short position. And as long as I hear them come on TV and go on about how they're all long or how they're all short, I'll continue to do that. So generally that's the direction that we move. So basically that's what the bulls are looking at the moment. Hopefully that these sentiments remain, and we should see higher oil prices, provided that we don't get any short-term news releases that could potentially affect the price on the downside. So how am I trading crude oil at the moment? Any one of you that receives my oil report will know that I've been long crude oil since around 51, at least in the medium term. I've been long since 51.16, and maintain that bullish bias. Okay. How I generally don't give out my live levels on the video. I look for you to come on board with me, at least start to receive my oil report, start to work with myself and my team. But one of the levels that I will just chuck out there for free this time is a level to watch out for. The level is 58.28. Now that the market is well above 51, the next level I want to watch is 58.28. As long as the market stays above 58.28, my bias will stay to the bullish side. I have a particular level where I'm going to start going short for the medium term as well, and where I'm adding to my longs as well. If you'd like to know more about exactly where my levels are, where we're getting in, where we're getting out, how we manage risk, when to get in, when to get out, please don't hesitate to get in touch with me or my team. My contact details will follow on the following screen. We will then get in touch with you yourself and help you get streamlined onto what's happening with oil and how to trade it going forward. So that's all for me for this week. I look forward to catching up with you next week. Cheers.